Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Monday, May 23rd, 2016. I'm Frank Ochoa, aka PivotBoss, with your analysis for the upcoming week. Here's a look at the daily time frame in the ES. Basically, we continue to be chopping around at 2061. That's been our idea since back in February. Was that if and should we bounce off the 1800s, we'd likely rally to 2061s, the HVN, and we'd kind of just sit there and go flat. And that's basically what we've done. One thing I've been talking about before here last week on Wednesday was don't be scared right here at this point below 2030s because we're in a trading range market. We're in a trading range market. So when price goes below value here, in a trading range market, the idea is that bulls will look to defend prices below value and return it to value and then to the top of value. We're not done with this trading range yet. There could be another month to 6 weeks at least of trading in this range before we actually see expansion, or we could take out these lows and really start going now. So I mentioned before that right here, this is just, it didn't seem like the market was ready to go. Bears got trapped below 2030s. And so far they've been used as fuel to push prices higher. The expectation right now would be that any pullback likely offers an opportunity to defend and squeeze this thing into 2070 to 2080, at which point prices may become overvalued and then you'd see a counter trend move back in the opposite direction. So right now what we're looking at is more chop around this area. The edge is at the edges of the range. Around 61, around 49, that's where everybody wants to trade it. Those are the HVNs of the composite and micro composite ranges. Not a whole lot of edge around that zone. So you have to be patient, and eventually we will see significant expansion from this range, which could spark a major market move. And it's likely going to be to the downside once it gets going. Okay, let's take a look at the intraday time frame. On an intraday basis, we've seen a lot of back and forth already in overnight and pre-market trading. Within a clear trading range. So 2043.5 up to about 2056s. That's the trading range right now. Bears are looking to fade the top end of the range. Bulls are looking to defend the bottom. The bottom also coincides with 5-day VPOC here. So if there is a violation through the bottom of the range, you're likely going to see a move back to the bottom of value on a 5-day basis below 2035. Overall, we should see more back and forth action until this thing is ready to move. So the idea would be to fade the edges of the range. Look to fade new highs, fade new lows back in until expansion occurs. All right, let's take a look at the NQ. Here's the NQ in a daily time frame. You can see right now price is basically coiling up in a very tightly compacted trading range here with an MCV pocket around 33.25. That's been the tight range here. Anytime price trades in the super tight range in this manner, it can only facilitate trade for so long before it has to see expansion. And right now, prices below 4,300 have been well defended. That's been our idea. Remember, I said when price comes back toward 4,300, that may be the last line of the defense for bulls, and it was. And so far, you can see that below 4,300, they've been absorbed. All bears that got short below there have been absorbed, and again, rotations higher. Eventually, if price can get back above 4,400, you'll likely see a move back toward 45.55, rather 45.50, which is the top of the range. But right now, you got to see how this thing continues to play out. Bears are looking to defend 4,400 for a rotation lower. Bulls are looking to defend 4,300 for a rotation higher. Eventually, expansion from this range will be significant, so watch for it in the days ahead. Now, if we're taking a look at the intraday time frame, very similar to the ES, we're seeing a lot of back and forth action today, an expanding ripple and expanding ridge, if you will. Right here, the 43.79 down to about 43.50. That's the trading range. Bears want to defend up here, rotate it downward. Bulls want to defend here, rotate it back up. Eventually, we will also see expansion from this range, but right now, that's the game. Failure to hold above the overnight pivot, 43.50, 43.49, opens up a move back to 5-day value, 43.19s. All right, let's take a look at crude oil. Rather, let's take a look at gold. Here's a look at gold right now. This one has become very, very volatile, and unless you know what you're doing, unless you really see a setup you like, it's good to kind of back off of this one for right now. And I've talked about this before. It's just very, very volatile, a lot of back and forth. it's a rodeo. That's why I say it's like a rodeo. This is the bull, and you're getting thrown off right now. Obviously, the trend has been upward, but all of the fits and starts here has just been very, very difficult to trade, especially the fact that we're sitting basically around composite value. So this is just an upward sloping trading range right now. You got to be very, very careful and only look to trade the edges of the range. Trading in the middle right now can be very, very dangerous. There is a very tightly coiled range here over the last couple days, so we could see a little bit of expansion if prices fail to hold 1247.80. I think 36.5 and 1228s could be the next key zones down below. Let's take a look at crude oil. Here's crude oil in a daily time frame. This one has been trending higher, obviously, and we had a target at 49.08. We reached that target and we pulled back, and I mentioned any pullback into the previous month's high, 47.46, could be a buying opportunity for bulls for a shot at squeezing into the next LVN above, which is 51.65. Bulls did come in there, did defend. However, right here, that's a failed new high. So it's a lower high basically. And when that occurs, it's basically the market needs to come back to the point of origin to defend again, or entice new buyers to enter by auctioning lower. So right now, this is the battle zone. See that LVN? It's 47.50. That's the area where bulls want to defend for a squeeze into 51.65. Failure to hold that zone could rotate this thing all the way back toward 44.72s. On an intraday basis, crude oil is showing a downtrending pattern here. The previous week's close significantly offered, and now we're coiling up at lows around 47.80 overnight VPOC. One thing to mention, the R3 bands, R3 and S3 bands on the PivotBoss bands are starting to pinch, which tells you right now that prices obviously are coiling, volatility is contracting, and that could lead to trading range movement that eventually sparks some sort of expansion ahead. So this pinching implies that prices are coiling and significant expansion could be seen. So watch this range very closely as we head into RTH, as we could see a nice move outside of it that sparks the next early move for the week at least. So let's keep an eye on it here. All right, that's it for now. Let's see how this thing plays out heading into the new week of trading. Good luck, trade well, and happy Monday.